Well, it's the end of an era, a multi-billion-dollar sale that would have been unthinkable just a few years back. The New York Stock Exchange, an iconic image that has reigned over stock trading in the United States for close to 220 years, tonight has a new owner, an upstart company in the world of derivatives trading, based in Atlanta. It's purchased the parent company of the NYSE for something north of $8 billion. Our Liling Tan has more on the story and joins us. Liling, this is looking like a pretty positive deal for all parties, or is it too early to say that?
It does for the most part, Sean, under the deal which will give Atlanta-based ICE or ICE control of the biggest equities market in the world. The company will fork out over $33 per share for the 220-year-old New York Stock Exchange. That's nearly 40% higher than Wednesday's closing price for the NYSE. And it might be good timing for the New York firm at a time when equities or stocks are essentially on a decline and unlikely to pick up anytime soon.
One of the things that it's very reflective of is the fact that, frankly, the last year has been, pretty tough for the equities markets, for equities trading, for trading activity and volumes. And I think the NYSE, although it is, as you said, certainly an iconic brand and certainly, a very well-known company with a good franchise. I think one of the problems that I think it's definitely, run into some rough waters over the past year or so.
The deal would merge the biggest exchanges based on listings in the US, France, and the Netherlands with America's second largest futures market dealing in energy, commodity, and derivatives contracts. The downside is that this could diminish the clout of the New York Stock Exchange as derivatives grow more popular over stocks. Languishing is the term used by Thomas Caldwell, the CEO of Caldwell Securities, to describe the NYSE, which has been losing volume and facing growing competition. But still, investors welcome the news, with NYSE shares rallying 34% to more than $32 at the close of the trading day. Sean?
Well, Liling, certainly a big jump in stock prices there. How different is this? You touched upon it earlier. How different is this from the deal ICE approached the NYSE just last year, which, of course, the Justice Department had big issues with?
Well, Sean, this is a far more feasible deal. The problem with that previous ICE attempt was that it was a joint bid with NASDAQ. And since NASDAQ, like the NYSE, deals in equities, that prompted antitrust concerns. This agreement now has less of an overlap that would raise red flags with competition authorities. So expectations are that this deal will likely go through.
Okay, Liling Tan, thanks very much for joining us in New York with the latest on that.